finally, we're getting into tax with artists and those in the creative space, and I'm super excited to chat to you guys about this. This is going to fall into 3 spheres. 1, where you're an employee, 2, where you're a freelancer, and 3, when you own a company. One of the only times where there's a specific tax for artists and sportsmen is where there's a 15% withholding tax for non-resident artists and sportsmen. If you are an employee, you meet the requirements of the Labor Relations Act. If you meet any one of these, you are regarded as an employee as per the Labor Relations Act, which means you're also regarded as an employee as per the Income Tax Act, where you then qualify for pay-as-you-earn tax rates if your income per month goes or exceeds a certain threshold, okay? So even if you're not being paid a set amount, if you meet these requirements, you are then going to be regarded as an employee, and the company that you're working for and employed at needs to be paying you your amount of money less the pay-as-you-earn. As well as you making sure that you get your IRP5s and all of the types of things that pertain to you being an employee. So number 2, if you are a freelancer, this is cool. It's like you're a side hustle thing, or you're taking it quite seriously. You're like full-time a freelancer, but you pretty much are not fully company structured or incorporated. So you might just be receiving income into your bank account. You should be paying tax for yourself because you're a sole proprietor. You are a freelancer. So your tax obligations should be your own. You don't get any benefits or anything like that. You have to take care of yourself, because that's the trade-off for owning your time, even if it doesn't feel like it. But that is the trade-off for owning your time. If you're a freelancer, you probably don't have that much structure. You know, you're just invoicing, or maybe not invoicing, you're just sending a WhatsApp voice note, hey, this is how much it's going to cost, please transfer it over. Whatever it is, if it's a side hustle, if it's like a real gig and things are up and then things are down, you are a sole proprietor in the legal sense of the matter, which means that yes, you are paying pay-as-you-earn tax rates, but you are paying that on your income less your expenditure, which will equal your profit. It is important in this stage of your space in life to do financial statements, to get some sort of structure. We do have an amazing business bundle starter pack that you can take advantage of. It has all of these templates. If you don't know certain things, you don't know how to plan cash flow plan, or you don't have an invoice template, or you don't have a way of recording your income and your expenditure, it covers all of that. I'll plug it down and you guys can take a look at that. For your sole proprietor, you're probably still dipping your toe in the water, just trying to see if this is something you really want to do, if this is a space you want to solidify yourself in, and that's okay. But you do need to realize that there is a step up in terms of your tax obligations. You will need to do financial statements. Thirdly is if you are a company. It doesn't mean you're big, it just doesn't mean that you're a big player now. It just means that you have decided to formalize it. You can go months without earning income. You can be making a steady income. But point is, you have incorporated your company with the company's intellectual property commission. And that is not just going to have SARS implications for compliance, but also with CIPC. So every single year, you're going to have to file annual returns with SARS and with CIPC. In so doing with CIPC, you're basically paying rent to stay on their database. It's going to be about 100 Rand if you're on time, and 150 Rand if you're not. So try to be on time. With SARS, you have amazing incentives. You have a beautiful profit threshold if you qualify for small business corporation tax rates. You have a buffer between 0 and about 98,000 Rand now of profit that is tax free, which is fabulous. If you don't qualify for SBC tax rates, you pay a flat 27% coming up now. Tax rates have been adjusted from 28 to 27. There is a lot to consider, especially if you've moved from being a sole proprietor to having a company. How do you pay yourself? How can you optimize your tax? How do you tax plan? That's something completely different. That's where we do tax consultations, because it can get quite nuanced and it needs to be applicable to you as a business owner. And we can find out some tax efficient strategies to help you out. But I hope that helps you when it comes to when it comes to tax as a creative, which tax rates apply and how they apply. Again, recapping, number one, if you are an employee, you meet the Labor Relations Act definition of that, you are liable for pay-as-you-earn tax rates. If you're a freelancer, you're a sole proprietor, don't have a company with CIPC, that means you are also liable for pay-as-you-earn tax rates, but on profit. Again, if you are a formalized company, it is registered with CIPC, you are eligible for SBC tax rates, turnover tax rates as well as your normal corporate income tax. I haven't spoken much about turnover tax, but it might be a strategy worth using in some cases.